Hello, folks. Brandon Chapman with you today. It's another Monday video for TheoTrade. It's Brandon Chapman with you. We're talking about today bonds pop, gold drops. But what about China? Um, it may sound like it doesn't sound like it goes together, but it does. We're going to talk about it today. Quick look at the market. We basically have a very neutral candle, open and close, very near to each other, high range from high to low. We're sitting at prior highs. If you want to look just at the cash session, again, seeing the cash open using SPY, again, you'll see just a little bit higher open that we traded into. But the point is, we're currently standing at resistance. One of the things that Don talked about in this morning's catapult coaching session was the fact that the volatility structure is steepening. Look at the VIX. The VIX is pushing back towards lows. When VIX are at lows, the inverse correlation between the market and the VIX means what? The market may be near highs. Better yet, we look at 3-month volatility. So we're out there a few months. The 3-month VIX is at 16.87. What I like to do is do a ratio of the two. This is one of my pre-move market pulses that I look for. You'll notice the ratio. Basically, the 3-month VIX is currently standing 15.5% higher than the spot VIX. You get about 1.2. We got about 1.9 back on 11/13. Again, it's signal, hey, we're kind of at a very high point. Look for downside activity. Right now, the selling in the VIX is causing the market to reset and price in higher volatility around the corner. And you can see that also in SKU. The SKU index reflects kind of hedging activity, buying puts, selling calls, drives it higher. On Friday, we haven't gotten today's print. My guess, we probably go higher. But Friday's print was at 161, near a record or all-time highs that we established many times over the course of last year. Basically, volatility expectations are rising, hedging activities rising, pricing in the downside risk of the market. What are you doing right now? Well, if we look at the bond market, TLT, we had the biggest day we've had since, for example, early August. We're seeing some rotation towards defensive names. However, it didn't exactly help utilities today, but it did help an interest rate sensitive sector like real estate, as real estate's up about 1.3% and testing resistance. Notice what's a laggard today. The S&P's up 1/3%. Technology was flat on the session, back up against highs. We saw Mag 7 get sold last week as the market went up a teeny bit. Again, repricing in these kind of downside risks. As we look at gold today, you'll see it on the list over here, was the worst performer. Underperforming the energy sector, was down almost 2%. Gold was down nearly 3%. What causes gold to decline like this? Normally, it's the dollar weakening in real terms. But we look at the relative terms of the dollar, DXY, we saw that the dollar was actually down today. You can look at UUP if you want a traded product to reflect. We're down about 0.7%. Okay, so gold's down today, reflected of maybe a rotation out of gold, or again, intrinsically gold is selling as a result of intrinsic dollar strength. But the relative strength of the dollar is also showing weakness, and in particular, this a 57% weighting to the euro. The euro catching a bounce off support today off of very oversold levels. And so we're kind of in this position that if the dollar starts to lose a little bit of relative strength, this should help emerging markets. If we look at EM today, how did EM perform? EM was basically flattish on the session. There's a 25% weighting to China, 20% weighting to Taiwan, and 20% weighting to India. We look at Taiwan Semiconductors today, not exactly performing, down 2.6%. So why am I talking China? Well, guess what? The correlation, generally speaking, bonds and gold move together. We haven't exactly seen that of late, and today is a perfect example where bonds are bid and gold was sold, right? Was on the offer. So we saw that we're seeing the breakup of the correlation even further today, and we are seeing the dollar's relatively overbought and maybe poised to correct here. And so what we're looking at is a potential scenario, maybe like we saw in Chinese stocks, probably not as big as we saw in September, but we could see a nice squeeze. A lot of companies that are components of KWeb, components of ASHR, for example, these are oftentimes very high short interest companies. We've heard the story of David Tepper being in China, of Michael Burry. Again, the recent filings doesn't show that they're out of those spaces, but it doesn't matter. Are we about to see a weak dollar scenario that's going to drive emerging markets higher and is going to help stocks like ASHR and KWEB? Now, why am I focused on these specifically? We're actually seeing some activity today in this space, in the options market. We call it a pre-move pulse, okay? In these issues, showing that, hey, there may be some immediate potential upside in these issues. And we look down here at option time and sales for KWEB. And we're going to look at, I believe, the 6th December expiration. You'll see there's a 1,500 contract trade at 31 cents. And if we're to filter out here, a lot of buying on the 31 calls for this December 6th expiration. Again, pointing to some near-term upside. And again, sometimes all you need is that precursor. That's this, right? This is the long call activity, buying the 6th December 31 calls. And then we start to get the movement as we move to and through 31. It helps create this positive feedback loop, potential gamma squeeze in KWEB. And it wasn't just KWEB. It was also in ASHR today. And so we look at ASHR. We look at the time and sales. I believe this out here for December 27th. You'll see, again, 2,000 calls bought at 11 o'clock my time, and earlier 4,000 calls. My thought process, that was also a buy trade as well. 6,000 contracts at the 29 strike, 22 cents. These are big trades that are coming in. What are they pointing to? A bullish outlook in stocks like ASHR. 29's right here, right? We look at KWEB. KWEB, we're looking at 31, just a little bit out of the money. And again, we break a little further. The great things about these stocks is the fact that they exhibit positive skew. What that means is, as we scroll down here, you can buy the lower strike at a lower volatility and sell the higher strike at a higher volatility. You can create a spread. Buy the 31, sell the 33. We go to 31. This trade's only costing you 50 some odd cents. You don't need it to go to 31 necessarily, right? Or 33 necessarily in KWEB to make money on that, right? 33 is right here, which stands about a 1/3 retracement of the selling to make maybe 70, 80% on that spread. ASHR as well. Again, where do we need this to get? Well, where do you want it? I mean, look, a 29 handle, 30 handle in ASHR. What's the potential in that? Again, look at the same 17 Jan expiration. You're buying the low vol and you're selling the high vol. Again, you could buy a 27 and sell a 29, buy the 24.5%, sell the 27.5%. It's going to cost you less than 50 cents. You don't need it to go to 29 to be able to make 70%, generally speaking. I know we're going out a long ways at 53 days. Gives us some time. If it doesn't move right away, you could go shorter amounts of time as well. This is the advantage of having volatility skew in your favor, something I teach about continuously during my sessions. And again, we're seeing right now is that we're seeing some of the correlations break out in gold, the dollar, and treasuries. Is this about to favor Chinese stocks to the tune of maybe testing the November high? I think we're definitely in a good position to see that happen for ASHR and KWEB. There was also some option activity in Las Vegas Sands and MGM today. The pricing for those spreads aren't as great, but again, they're generally tied to movement in China because of their presence in Macau and elsewhere. So again, something to watch right now. I don't know where gold's going right now. We're definitely taking a little bit of a break. We'd love to see it kind of shore up a little bit, but the dollar itself may be poised here in relative terms to start to weaken against the euro, maybe weaken against yuan, for example. That's going to help Chinese stocks in this scenario. Well, folks, that's what we got today for the video. We'll catch you back on next Monday's video. Have a great one. Thank you.